Welcome to our show this week. We got a big show planned here on Earnings Call. We're going to be looking at stocks like Philip Morris, Lockheed Martin, Texas Instruments, Tesla, Coca-Cola. Those companies all had earnings this week, or excuse me, last week. And then this week, huge week in the markets. We're looking at Ford, Visa, PayPal, Microsoft, Intel, Amazon, and so much more right here on Earnings Call. Let's get started. Good day, everybody. It's Monday, and we are at the start of a new earnings week. Believe it or not, we have over 1,000 companies declaring earnings this week. We are in the heart of earnings season. We are really busy right now, putting trades on, taking trades off. It's just a constant churn right here. So we are going to start with the headlines from last week and begin to look at some of the charts. We're going to begin with Philip Morris. Philip Morris beat up and on both revenue and guidance. And we're looking at the chart here. You see that the stock had an estimated move of only 4%. And this is where market makers often get it wrong. Stock moved 10% on results. Now, this is interesting because the company, this is on smokeless tobacco products. Big change in the company dynamics, big change in company direction. It showed in their results. Stock moved up over 10%, still holding up at those levels. All right, next headline, we're looking at Lockheed Martin. This is in the defense space, of course. And boy, what news on Lockheed Martin. They beat on revenue, but they missed on gross revenue on 17.1 billion, misses by 270 million. All right, so it was a result that was kind of mixed. But if we look at the chart, you'll see that the stock was had an estimate move of 4%, but they didn't really like what the CEO had to say and some of the things that are going on. Stock moved down 6% on the results, and you can see here on the chart that over the following days, the stock dropped about 1% per day and is now over 10% off of that high that it posted last week. And you can see, look at the chart here. Since, we're down to levels since August 26th. So all the gains from August 26th through last Friday have been erased, or last week, about Tuesday. And within 4 days, it erased 3 months worth of work for the stock. All right, moving forward on Texas Instruments, they beat on all around. And they rallied on increased expectations for the next quarter. So Texas Instruments was looking good. The stock had an estimated move less than 5%. And the results, option traders got it right. The stock moved only 4% on results. Now, it did rally the following day and then had an actually big move, moved up above 210, but then came off of that. But the stock did move on the actual earnings event. It moved less than the average move of the stock. All right. Now, it's important to remember that we are talking about average moves in the stock, what we think are going to move big and what we are think going to move very little. And that's kind of something different here. It's all about the trade. All right. Finally, our last headline of the day here, as far as last week goes on headlines, is Tesla. Tesla had they beat on revenue, but then they missed on revenue miss of 490 million there as it came up. They maintained double-digit year-over-year growth. And looking at the chart, the stock had an estimated move of 13%. And because of this maintaining of their year-over-year growth, they posted a move of over 16.5%, and then had follow through. Okay, so just on the earnings move was over 16.5%, and then the following day up a couple of more percentage points. And you can see here today the stock is pretty much unchanged, down about 40 basis points. All right. So those are the major headlines from last week. But let's go over some of the other big names that declared last week. We have Coca-Cola. It had an estimated move of just 2%. Sure enough, the stock moved 2% after the results. That drop, it looks pretty bad on the chart, but believe it or not, that was a 2% move on the stock, and that was the exact estimated move from the market makers, and it transitioned into the stock after earnings. Then AT&T, which is always a good stock to trade around earnings, had an estimated move of 5%. Stock moved 4.6% on results, then began to pull back for AT&T. Now, Boeing is next. Boeing's had all sorts of problems. They had an estimated move less than 6%, but the stock got barely out of the gate, moving only 1%, less than 2%, only 1.7% on results. And the stock is still showing weakness. It's well below all moving averages on this are pointing downward. There's my long-term and there's my short-term moving averages, and both are pointing downward. All right. Then Deckers, this is often a big mover. It was our trade of the week. We're going to be taking a look at that stock last week. It had an estimated move greater than 15%. The stock did move 13.6% after the announcement, but then the next morning it came off of that and only moved higher and closed on the day up 10.6%. We'll see how our trade did in just a few moments. UPS had earnings and a big move, what appeared to be a big move throughout the day. Okay, stock had an estimated move of less than 8%, and the stock gapped higher by 10% before closing higher only 5%. So in other words, the stock moved less than the estimated move. Market makers got it right, meaning those that were selling premium made money on this trade as the stock came off that big move and then came down and closed only 5.2% higher on the day. That was the move for UPS. And then General Motors, it had a move of expected move of 7%. The stock actually moved higher by 9.8%, and you can see that that move then we got a little bit of a sell-off going on after that move, but this was on some pretty good results and good expectations by GM. And then we finished out the week with Airlines last week when we were talking. All right, American Airlines Group, it had an estimated move less than 7%, and the stock settled almost unchanged on that earnings announcement. Let me give you more data here, and let me remove this line here real quick so you can kind of see the stock. It had a little volatility through the day, but in the end, it closed down just a couple of basis points, not much of a move for American Airlines. And finally, Southwest Airlines has been in the news a lot. If you don't know, they have an activist investor, Mr. Elliott, that was insisting on seats on the board and more of a active position with the airline. The airline and that investor came to some agreements. So the stock had an estimated move of 7% or less. And because of that agreement with that activist investor, Southwest Airlines moved only 5.56% on earnings. And you can see that gap down is followed by a rally as the market digests everything that happened in those results and the fact that they came to an agreement with a major activist investor that was seeking seats on the board. Okay, so that's a quick recap of last week's results. Let's jump into this week, because this week is as big or even bigger. Now, let me emphasize once again that on our sheet here, the stocks on the left-hand side are stocks that we anticipate are going to move big, over double digits through the week. And that's actually, let me rephrase that, not we expect, it's what the market makers and traders, well, like me, expect will happen to these stocks. Stocks on the right-hand side are stocks that will move less than double digits. In fact, some of these will only move 2 to 3% through earnings. And interesting to note, you'll see a couple of names on there, Apple, PayPal, Chipotle, for example, that used to be on the left-hand side of the ledger and now are only on the right-hand side. But we're going to get into some of these names right now. Let's begin with Ford Motor Company. Going to the chart real quick. Ford has an average move here of 10% on earnings, believe it or not. And that's actually surprising. So they declare after market close today. We're going to see their results here pretty quickly. After market close by about 4 p.m. Central Time. That is a possible breakout candidate. Then we move to the other side of the ledger on waste management. Waste management will declare today after market close. We anticipate a move less than 6.5% on waste management. Okay, you can see, believe it or not, this gap down that you see is not all that big. If we really bring the chart in, you can see there that the stock just, it looks like that was a big gap, but believe it or not, I think looking back, that gap was only 8%. Okay, so not much more than the 6.5 expected move here for waste management. And then an old favorite here on Crocs. This will have earnings tomorrow morning. On Tuesday, we expect a move of greater than 12% for Crocs. This typically is a mover. Crocs is usually a consistent breakout candidate. Option pricing right now is pricing right at that 12% move. So they're expecting some activity. I wouldn't be surprised if it moves a little bit more. Now, another active name in the tech sector is Advanced Micro Devices, and they are also typically a big mover. They will have earnings on tomorrow after market close, and tomorrow being October 29th. After market close, typically AMD moves over 13% through earnings. That's currently the estimated move for the stock. And we will see what those results look like then next week on next week's show. Okay, then we have a couple of financials here. Visa, this is on the quiet end. Believe it or not, Visa just doesn't move very much through earnings. The expected move for Visa is less than 3%. Okay, the stock just doesn't move very much. The revenues are usually pretty consistent. The outlooks are usually pretty consistent. So the estimated move is pretty narrow on there, and they just don't think it's going to move very much. As you can see, it's less than 3%. Then moving over to PayPal, same kind of thing here on PayPal. We have an estimated move of 9%. That's actually a pretty decent move for PayPal, but again, it's still under that double-digit move that we look for these big breakout candidates. But this is still considered quiet. It's right on that cusp of being mature. They have this relatively new CEO that's in there, really changing the future guidance of the company. And we can see this as a bigger financial institution, which means quieter results around earnings as far as move in the stock. Okay. Now, another former big mover, like I mentioned, is Chipotle. Chipotle will declare tomorrow, Tuesday, after market close. It will move less than 8%, is what the market makers are anticipating. Also, the historical move of the stock is now under double digits. This used to be a big double-digit mover, not anymore as this company continues to grow. Okay, getting down near in the last 5 or so stocks, Carvana will declare on Wednesday after market close. This is typically a big mover. Okay, this stock does move around. You can see currently it's trading at over $200, and you can see on my chart here, if I just go back, we were trading at $100 in June of this year. This stock can really move. It's a big mover, and the estimated move right now is around 26%. The average move, okay, if we look at the average move of the stock around earnings, it's actually at 28%. So interesting. It will be interesting to see what happens on Wednesday after market close. Okay, now into some of the big names that you probably are waiting for: Microsoft, Intel, Apple, and Amazon. We're going to close out our show with those, and then I'll give you a trade before we end. Let's start with Microsoft here. Microsoft will declare on Wednesday after market close. The stock only has a 3% expected move, not very much from Microsoft. Same thing with Intel here. Intel, well, guess what? Same sector, kind of in that tech sector, but we have an estimated move here of over 12% on Halloween. Okay, very interesting. After market close on 10/31, we will get Intel's results. And just being in that chip sector, you can see the last earnings, man, this stock really dropped. And we'll see what happens again this cycle, expecting double-digit move for Intel. Now, if we go over to Apple, again, here's another quiet stock. Apple's just such a mature company now. It's really hard for them to move the needle, okay? and you might go, "Oh, great, we got a 3% move." But in the world of trading and specifically options trading, this is a quiet move. We will actually sell premium going into this earnings event, meaning we will sell that very expensive IV that happens when we approach earnings and option prices get more expensive because we just don't expect a big move at all from Apple as we go through earnings. And then we'll close out this section with Amazon. Amazon's kind of right there in the middle now. Used to be a big mover, just like some of the others. And right now it's a single digit mover, only moving about 8% is what the expectation is. I just checked right before we came on air, and pricing for this was about from the market makers was a little over 7%. So we'll see. Okay, we'll see if the market makers and the historical move of the stock is in line as we go through earnings. Amazon declares also on Halloween, October 31st, Thursday, after market close. All right, so that is our list, a huge list this week. Some potential big movers, some not so big movers, but big names, multi-billion-dollar companies. And if we get some surprise results, that could be market moving news. We could see the market move pretty big. For example, Microsoft is in the Dow. So if that has unexpected move that's double digits, that would move obviously the index. So we'll see what happens as we get through the trading week. Okay, so moving on, let's talk about our trade from last week, and then I have a new trade for you this week. Interesting. So we did a trade on Deckers, as I mentioned, and this was the trade setup here. We had a strangle. The stock in the next couple of days actually trickled downward before the earnings announcement. Then we got the earnings announcement, and the stock did gap higher, okay, which was nice. But the problem is we had traded lower a couple of days beforehand. So the stock, after market close, moved higher by 13.6% post-market, and then settled in the morning after through the trading day, and then after market closed up only 10.6%. And so the result of this, if we look at where we are in the trade, we are still in this trade because, we have time. Options that we chose on this trade don't expire until this coming Friday, all right, November 1st. And so you can see the gap up higher. It's trading just below the upper break even in the trade. This particular trade is down by about $300 right now. So a little bit of a rally of 2 to 3% over the next couple of days will put us in the profit zone, and we can take profits on the trade. All right, so we're holding on to this for right now. The stock did gap up, but you can see the little trickle down. If the stock hadn't trickled down and we got this same move, we would then be profitable in our trade. Okay, but we did get that little trickle down before the earnings event, and that kind of threw it off kilter. Stock moved, but did not move quite enough for our trade, and you can see the results there. So that's a hold for right now. We will be exiting that before Friday. Okay, so let's get to the trade of the week this week. Okay, and wouldn't you know it, we like that Carvana trade. All right, we like that stock, and this stock historically has been a big mover, as I mentioned before, and we're looking for a big move here. Now, what's interesting, the estimated move here on Carvana is coming in right now at, let me just double check here. I think it was around 24 or 23%. And historically, it moves about 28. So for us, we see that as an edge in the trade. This is a strangle. Probably you can do stock with the stock trading at 204 right now. You can look at buying the 200 puts and buying the 210 calls, or you could look at doing the straddle at 205 but you'll pay more money for that. This is an expensive trade. It is over $2,000. So really, this is only viable, okay, for an account that's greater if you're using good money management, good money discipline for over accounts over $40,000, okay, because it has a debit of over $2,000. Now, that doesn't mean that the stock can't make money. I mean, these big dollar trades can make big money. But unfortunately, smaller accounts, it's just not appropriate for accounts that are, say $5,000 or $10,000. That's just a lot of risk for for a company that, maybe they have flat results and the stock doesn't move. That's a big risk for a small account. So make sure if you're using good money management, it's for accounts greater than $40,000. We call that a high value trade, and that's who those are for. Okay, so that's it for this week. Next week we'll cover many of these stocks again, seeing what the results were, talking about their outlooks just a little bit. But we expect another big week this week and next as we keep plugging through earnings season. Lots more to come. Everyone have a great trading week, and I'll talk to you again soon. Take care.